3 lakh crore of credit infusion into the sector. The package is sizable considering the total amount lent out by the banks to MSME in the year 2019, which was only rupees 2.8 lakh crore. In this rapidly changing market condition, the dynamics of MSME businesses are evolving every day, and therefore it is important to not only rely on original structural strength of MSME, but also to regularly monitor borrowers' behavior. According to RBI's March data, micro and small industries accounted for 4.3% of all bank loans, while the medium-sized category had only 1.3% of the bank loans. The total amount of loans outstanding to MSME industry stood at rupees 4.87 lakhs crore at the end of May. This COVID crisis and the consequent lockdown have posed the tough challenges for MSME in India, stemming from their limited financial resources. As a result, the government has announced several measures to help the country's 63.4 million MSMEs due to their important place in. They employ 110 million people and account for 29% of GDP. MSMEs financing needs to grow at rapid pace in order to meet the sector's needs. Given the importance of the sector from the employment generation viewpoint, investing in infrastructure to support MSME lending is important and is likely to reap rich returns in the future. Major challenge in MSME lending arises due to the difficulties of carrying out credit appraisal of the firm in the sectors on account of their lack of credit history. The lenders need to invest considerable time and efforts in making their assessments, resulting in high transaction costs. However, lenders are increasingly tapping into recent development in digitization that have resulted in availability of new sources of information regarding MSME, the availability of digital public infrastructure such as GST data and Indian Stack. A set of open application program interfaces are especially useful for such lending. In addition, the trade receivable discounting system or TREDS and electronic platform for auction trade receivable is also helpful for MSME lenders. While lending to this segment has traditionally been associated with higher cost to serve, the use of digital data could reduce costs significantly. Such data is also useful for MSME lenders who lend based on enterprise cash flow due to non-availability of financial statements. With more and more sectors turning to artificial intelligence to find real-time solutions, it is no wonder that artificial intelligence would gain momentum in the field of credit risk management as well. Artificial intelligence adds efficiency to the process by offering an insight into the portfolios of potential borrowers, which was not available to financial firms up till now. These technologies are able to learn from complex datasets and become incrementally more accurate over time. In order to eliminate risk, the banks need to identify risk factors, which means going through data mainly regarding borrowers' financial activities, portfolio to decide whether a particular individual or a commercial firm would be able to pay the money back from the lending. The process needs to be much error-free as possible, because while analyzing the portfolio, any mistake could lead to failure to recognize a potential defaulter, or might result in rejecting an applicant who could have been available customer in the future. Credit risk modeling courses are being developed to train professionals to deal with these highly specialized skills. Credit risk management will continue to be a key area for financial firms in the future as well, given the present circumstances. The risk factor would only grow. It's a time for the sector to recognize and embrace the potential of artificial intelligence in the mitigating the risk. As regards the Institute of Cost Controls of India, which I represent, is a 76-year-old body, and also note that in the Chamber of Commerce is also has a long history in establishment. We at the institute have a separate banking services and financial insurance department. Here we have launched separate courses, certificate courses on risk management, credit management of banks, certificate course on component audit of banks, certificate course on treasury and international banking also. I've also interacted with some of my friends in the banking is that we have a robust cost audit report mechanism existing in India. If utilized by the banking while giving the credit, it will reduce the credit risk because it's a more robust report giving the product-wise and area-wise information. With this opening, so I once again welcome all the dignitaries and thank the organizer for calling here. Thank you so much.
Thank you, Balvinderji. In fact, as you rightly mentioned, the MSMEs contribute significantly to the development of the Indian economy, and especially the sector's stability is critical in meeting the national objectives of employment generation as well as this, leading to an overall socio-economic metamorphosis of the country, especially during the COVID times. In fact, the MSMEs, as you mentioned, account for 31% of India's GDP, and an estimated of nearly 6 crore MSMEs employing close to 12 crore people. In fact, that only shows that there are very, very small MSMEs. And having said that, many of them, nearly 60% of them, are in the rural areas. However, it is, as I was mentioning, it is already greatly in trouble and further stressed after the COVID-19 pandemic, and there is a nationwide lockdown, and they have a very little buffer for the what the bigger firms have, and this lack of access to capital, cheap capital, make their survival a real concern. In fact, before COVID itself, the MSMEs, the NPAs were slightly on the higher side, around approximately 19 to 20%, more than 15%, whereas for the micro MSMEs, they were slightly less. That's a different bucket altogether. But having said that, there is a thinking that with COVID, nearly 35 to 40% of the MSMEs will struggle, if not more. Now, as we are all aware, the government has come out with a lot of support, and one of the main one is within that 21 lakh crore, economic relief package that was given. 3 lakh crore is for that collateral-free 4-year tenure, MSME for the, credit-linked guarantee scheme. And there, many of the banks, and that's a 3 lakh crore guarantee scheme, which has been backstopped by the government of India, fully guaranteed. And along with this, the government has also given a rupees 30,000 crore special liquidity scheme for investment in debt papers of NBFCs. Further, there will be a moratorium which has been given, and basically around this 3 lakh crore backstop facility that has been given. These are for MSMEs with a turnover of about rupees 100 crores and with outstanding credit in the banking and the NBFC sector of up to 25 crores, and 20% of these total outstanding credit as on February 29 can be taken, and this will be closed by 31st October. As of today, we understand the banks have sanctioned nearly 44% of that, of these emergency credit line guarantee scheme, and the disbursements out of these 1.30 lakh crores which has been sanctioned, the disbursements is approximately around 80,000 crores. Public sector banks have sanctioned a little more. The private sector banks are also sanctioning. And today, we also have with us for the first time from the NBFC sector, the Tata Capital. Can you hear me, Mr. Sabharwal?
Many video.
Yeah. So today we would also be hearing from Mr. Sabharwal on the NBFC, response to the crisis that is there in the MSME sector. However, to begin with, I'll be requesting Mr. Pallav Mahapatra of Central Bank of India about what the public sector banks are doing to help these MSMEs who are already there as having their accounts with Central Bank of India, as well as those, because if at a point of time on 29th February, they had very little outstanding, or maybe they had a credit balance, but most of the MSMEs, large or small, will be under stress. So what are they doing outside this, the emergency credit linked guarantee scheme? Mr. Mahapatra, we would like to hear from you about the central bank's response on how it is to be taken forward and your own views in it. Mr. Mahapatra.
A better idea than I have. See, as a banker, we have more of these practical ideas than these statistical numbers which you can quote, because we work on the ground to see what are the ground realities. So, starting on this, the support which is required for the MSMEs, it is not only after the COVID-19 situation came up, MSMEs were facing some problem even before that. And I think RBI came out as on January 1st, 2019, a circular for the restructuring of MSMEs without the downgradation of those accounts, provided these accounts were not NPA as on 1st of January 2019. A lot of efforts were done by the PSBs because as a banker with my 3.5 decades of experience, I can say that if I am able to do a restructuring of a MSME, and that MSME for months together has been able to maintain the account in SMA1 or SMA2, that means he is getting money from somewhere to save the account from slipping into NPA. If those accounts can be restructured and the hit to the bank will be only 5%, this is if these accounts slip into NPA and the hit becomes 15%, as a simple commercial terms, it is always better to restructure. Number one, on the hit on the bank, which will be beneficial to the bank if I do the restructuring. Number two, the asset can be saved from basically getting into some sort of a junk. So this was the beginning, and again RBI came out with the MSME restructuring, which is now valid up to 31st of December. That came out as on 1st of January 2020. Now, what I feel is most of the bankers have realized that restructuring in case of the MSMEs, which are facing the stress, is the right way of resolution of the stress problem in the MSMEs. But sir, I want all the stakeholders in this ecosystem to basically discuss on the point why the MSMEs are in stress. The question is how much capital they need and how much capital they are getting. That is one part of the debate which should go on, whether the borrowed capital, which is as per their requirement, is being given to them or not. How much is the gap? That is one part. My simple point is that MSMEs, they manufacture or they do some sort of a services, and they are doing for some other industries. Now, MSMEs being small in size as compared to other industries, their working capital cycle, they cannot afford to have a longer working capital cycle as their own customer base, because this customer base of these MSMEs are relatively larger size entrepreneurs. Their working capital cycle is larger than the working capital cycle of these MSMEs. Now, if these customers do not pay to the MSMEs, even if there is a delay, but not beyond a reasonable delay, so their capital conservation will be much, much better, and they will be able to sail through with the capital, whatever they are getting today, very easily. This is my assessment as an individual. My question here is that why there is a lot of dispute and litigation on the materials being supplied by the MSMEs to these large units. Now, whenever there is an, the MSMEs have to supply to the large industries, there is a contract. In the contract, everything has been clearly laid down, that if in the case of the dispute, what are the measures? But why those things are not being followed? Is it only because of the borrowed capital they are suffering? See, if you look at the working capital cycle of any entity, that starts with cash and that ends with cash. If they get the cash, if suppose whatever is their requirement is met through the loan or the credit from the banks, that means they are getting the cash at the beginning of the working capital cycle. But if they are not able to get back the cash at the end of the working capital cycle, then whether the MSMEs will be able to sustain, this is my big question. I don't think that a lot of debate has or the discussion has taken place on this. And those customers, why they raise the issue of the quality once the materials have been supplied to them. This is my question. I have nothing against anyone, but I feel MSMEs who are self-grown, they are not basically the businessmen or doing the business for generations together. So they need this support, that those customers who are buying their goods, they should also have the same sort of approach as other stakeholders in the ecosystem are having. Now coming to this post-COVID, I am really grateful to both the government of India and the regulator that they came out with the solutions well in time. If I talk about this Atmanirbhar Bharat, the gamut of the activities and the different entities which they covered was so comprehensive and was so massive, and a lot of thoughts have gone into that, that I think the entire nation should feel really obliged for that. Now coming to that emergency credit line which Atanu Sahab spoke about, which is nothing but that that MSME customer should not be SMA2 or NPA as on 29th of February. Their total turnover, the turnover should not be more than 100 crore. Their loan from the entire banking system should not be more than 25 crore as on 29th of February. Then 20% of their outstanding on that should be given without any assessment by the banks, and it will be 100% guaranteed by the government of India. So this helps the bank on both the sides. First of all, the liquidity is in the hands of the MSME. If they are facing any liquidity crisis on account of which the unit is going into stress, that will be taken care of. Number two is there is no additional hit on the bank because this is 100% guaranteed by the government. That particular portion will have a zero risk rate. So there is no capital allocation on that particular portion in the bank disburses. Number three is that the eligible accounts immediately bank through the portal which has been developed by the NCGTC, bank will be able to know whether the guarantee cover on that particular disbursement has taken place or not. Now, the question here is, what are the eligible cases? What is the eligible amount? What is the total sanction? And what is the total disbursement? I don't have the figures of the banking industry as such. Whatever I will go by, whatever Atanu Sahab said. But I can say is that the percentage, whatever Atanu Sahab said, maybe of the banking system as a whole, but public sector bank and at least Central Bank of India, our performance on each of the parameter, whatever he said, is much more than whatever is stated by him. So it is not 50% in case of sanction. It is more than 90% in case of sanction. It is not 50% of the sanction which is the disbursement. It is more than 85% of the sanction which has been disbursed. There are some cases where the borrowers have opted out. I will give you the example why they have opted out. We have given say warehouse receipt financing to MSME. Now, in case of the warehouse receipt financing, so he got the commodities out of the warehouse. So the money was paid. So he doesn't need. He has given in writing that he doesn't need. Now, just think of MSME borrower. If he wants the money for further deployment in his activity, and he doesn't want the money just for the sake of getting money, so don't we think that he is a very genuine, honest, and sincere entrepreneur? Because he is concerned about the interest burden on his loan. So my here advice to most of the MSMEs is, am I taking Atanu Sahab too much of time, or I should shortcut? Hello.
You carry on.
Hello, sir.
No, you carry
Okay.
on for another 5-10 minutes.
Because whatever I am saying is from our practical experience. I am not saying anything from the book, or I am not saying anything from the research paper. Now, my only advice to the MSMEs is, to the extent whatever, even without your margin coming in, whatever you need for the generation of the revenue in your business, you take that debt. But don't take the debt for the sake of it, because ultimately you are responsible for the interest on that debt and also the refund of that debt. So on the same ground, the moratorium which has been given by RBI, both the moratorium on the principal and also deferral of interest conversion into term loan to be paid by 31st of March. My advice is, if you have cash, if you have generated surplus cash which you do not want to, or there is no requirement of the reinvestment of that surplus cash in the business, whatever you are doing, it is better to pay off, because the interest on interest, that particular pain will be realized when that interest is to be paid or the installment is to be paid. If you don't have that surplus, there is no harm in taking the moratorium. There is no harm in taking basically extending your interest payment. But the surplus cash, be very sure that that surplus cash is, if it is being properly deployed today, is going to help you. I'm not talking about the banks. Now, the third point which I want to basically highlight here is, since rating agency and the number one rating agency, CIBIL, is there, sir, during the normal times, the rating parameters, and during this pandemic time, the rating parameters, there has been a, I will say, massive change. Now, if during the normal time, one is thinking about what is the capital base company, and during this pandemic time, what is the capital base? There's a huge difference, because for the last 3 months, take example of aviation industry, airlines. Now, in case of the airlines, for more than 2 months, all the aircrafts were grounded. Even there was no international flight, right? So that means that was the only source of revenue for these airlines. So that means the revenue was zero for 2.5 months. But there were some expenditure. They had to pay the parking fee. They had to pay other fees to the Airport Authority of India. They had to pay the lease rental on the aircraft which they got on a dry lease or wet lease, because these international players did not listen to the force measure. Now, in those cases, sir, so for some time, they will be consuming their capital to service whatever is the obligation. After that, they will not be able to. So their capital, this is the debt, over a period of time would have definitely come down. But if we rate based on their capital or their leverage ratio, I think whether that is right or wrong, this is my question. I'm not saying, I'm not basically questioning on the prudence of this type of rating. But this scenario is totally different. This scenario is not like whatever was in the normal time. The same type of rating is for the MSMEs also. Now, MSMEs, if we think today the MSME, if suppose the standard ratio with leverage ratio, if the rating agency is thinking of 5:1 or 6:1, will this apply in this current scenario? When he is not getting his sales realized, because his customers are also facing the problem, so he will be consuming his capital in basically servicing some of the debt. His leverage ratio will come down. His turnover is going to also come down, because for 3 months there is no movement of goods. The total restriction on the movement of, or on the transportation. So these are my points, sir. What I strongly believe is, this is the time where I think the normal, whether it is based on 3 requirement or it is the external rating requirement. These should be undergone a major change, because what is more important today is whether we will be able to save our economy or not. My question, I may sound to be a little bit radical, but my strong belief is if the capital is not in the hands of the manufacturers, whether MSMEs or large or small or agriculturists, the economy is going to go down under. If the economy is going to go down under, then where will be the utility of all these rating, Basel III and other things? This is my initial take on the entire pandemic. So we should all have, not only the bankers. I'm not saying that all the bankers are not risk averse. I'm not basically giving taking a very defensive position for the bankers. There may be bankers who are risk averse. But my question is, as a banker, if everyone in the ecosystem plays the right role and basically forget about this risk aversion, because we are taking risk, no doubt. But if there are two things, take the risk today, and there is a possibility there is a recovery in economy. Don't take any risk. I can tell you, sir, with 100% of guarantee with my experience, the economy is definitely going to down under. So which is better, taking a risk or not taking a risk? That's the simple thing.
Thank you, Mr. Mahapatra. In fact, you have, touched upon very relevant points, extremely, the points that you have mentioned. It is not only a question of capital, it is also a question of honoring contracts. You have also mentioned about what would happen if the contracts are not, honored. You have also, touched upon, and the figures that I was mentioning earlier, it is for the industry. It is not for central bank specifically. What I was mentioning is about 1.3 lakh crores have been sanctioned out of 3 lakh crores, and that is for the industry, both banking and NBFCs taken together. And the disbursement across for the banking industry is around 80,000 crores. Mr. Savarwal, in fact, NBFCs are also required to help the MSMEs. So the interest rates for the banking has been capped at around 9. For the for the NBFCs it is at around 14, and I think NBFCs will only be looking after definitely their term loan requirements. Mr. Sabarwal, Tata Capital is one of the largest NBFCs that we have in the country. How are you, seeing this panning out, the MSME issue during the COVID and post-COVID? Mr. Sabarwal?
No, thank you. This is clearly a very important sector, and I hope everybody realizes the importance of this sector. This is probably one of the biggest job creators too. So it's not only a question of their survival and their supplies to larger companies, but it's a question of the issue of employment. And if we can sustain this sector, then we can probably, get more and more people employed rather than keeping them at home. So clearly, at this point of time, their cycles have got impacted. They need money to kickstart business, because we initially saw a complete lockdown happening in the initial 1.5 months or so, where everything came to a standstill. So at this point of time, there is money which is flowing into MSMEs. In certain cases, this 20% itself may not be enough, and they may actually need more money to kickstart this. The government did the right thing in terms of saying that we will offer guarantee for this much amount. But I think so all of us have to look at what is the actual need of the entity, and the entity needs more money. More money also needs to be given to them. Is this happening at the pace at which it should happen? I would largely say so, not fully to the extent, but I would say that there has been a sharp movement in the last 30 to 40 days of more money flowing in to these sector. Same is happening from our side too. across the different, we have an NBFC and a housing finance company and the infrastructure lending company. So at all places, we are looking at and funding those entities which require capital. Obviously, our money comes at a slightly higher than what the banks can offer. So the entity, if it is getting, does prefer a lower interest rate. But the place where probably we can do it better is if we can do it slightly faster. So is this sector important? Is this money? It is getting money, is it right? And I also feel that we need more than 20, which is being spoken about. The other aspect which we all is this, that there are MSMEs. There are MSMEs which are linked to large corporates. There are MSMEs, which are direct to customer and customer. MSMEs in the rural sector. I feel the rural sector suffered less than the others because the flow of actually went closer to that, and the comment voted that's the others. The others, MSMEs, which have a direct to customer, seen the opening up happening with the more, retail outlets and things have started moving. The ones which are supplying to the large companies, the movement supply chains were empty and they had to be. But I think there are larger companies which are, because of the very nature of the sector in which they are present in, and they're supported that MSMEs can actually supply to them. So the MSMEs which are linked to large corporates, unless the large corporates are supported, it will be tough for these MSMEs to start making a difference. But the ones with direct to customer, things have started opening up. One thing which I would like to state to you is we should know this pandemic is real and it's here, and we don't when it's going to get made, but we don't know when it's going to get over. But I don't think so. We all can live in fear points of time, and we have to start opening up. It's more of opening up of our minds rather than anything else. And that fear has to get moved away. And like, for example, in bigger towns, we have to start public transport. We have to, even with half the capacity, or we have to start ensuring that people can move around. Only when people can move around will the economy come back into shape. So I think besides money, if we can, as a country, start focusing on opening up and allowing in measured quantities for around, things will start getting back to normal shape before.
Thank you, Mr. Sabharwal. In fact, you have touched upon, you rightly mentioned that three types of MSMEs: ones that are linked to large corporates, and the other ones are actually coming out of it better. The micro MSMEs, the smaller ones in the rural space, as well as the direct customer links are also, with the opening up, will be in a better position. And as we open up, as you rightly mentioned, business has to come back to, if not fully normal, near normal. Otherwise, the stress for these smaller, medium enterprises will be huge. Having said that, Mr. Kumar, you are heading Civil TransUnion, and already a salvo has been fired by Mr. Mahapatra. And see, the point is basically, isn't it true that in these difficult times, you have to look at from a different perspective about the rating. Uh, uh, Mr. Rajesh Kumar, can you just give us a, your view of what is happening, what needs to be done, not only here globally, as well whether you need to look at it differently for your rating purposes, especially rating the smaller companies. Rajesh.
Thanks, Mr. Atnu, and good evening to all of you and all the participants. Great listening to Mr. Balvinder, Mr. Mohapatra, and Mr. Sabharwal. Uh, I think this topic is one such topic that 15, 20 minutes or 10 minutes could be too small for you to talk about. At the same time, you could sit whole night talking about. First of all, I think I've always looked at MSMEs as a not just as a segment or a sector, but an ocean. And we all know enough about the importance of MSMEs. I like to look at it from my personal viewpoint to say every day, every single thing that I use, touch, I need. How many MSMEs have played a role in those, right? I look at these headphones, I look at the laptop I'm looking at. There must be many MSMEs who made those small components and then gave it to a larger manufacturer, which also will take my mind again back to Mr. Mopatra's point on payments by large corporates, etc. I'll come to that, but before that, on MSMEs, yeah, I think first of all, this ocean, many a times I keep thinking that perhaps this whole ocean of MSMEs gets painted with one single brush on one hand, or on the other hand, if you see, we sometimes I think we're a little frozen in time when we talk about the MSME segment as such. The reason I'm making this statement, probably I'll try and justify with two thoughts. First is that if you look at the whole MSME segment, there are about 88 million current accounts. There are only 200 million known commercial entities in our commercial bureau at TUCIBIL. We all know that the GST registered entities are less than 10 million, right? So if you just look at this number, this whole waterfall current accounts, but normally we say about 50 to 60 million MSMEs in the country, and then we are saying only 20 million in the commercial bureaus, and then sub 10 million in the GST fold, right? So clearly, this whole segment needs to be broken into different segments, and be it interventions to revive the growth or increase the flow of credit to the sector on one hand, or also risk management on the other hand. I think it all needs to be broken into different segments. And a few thoughts around these, and we'll link it back to some of the points we've already touched upon in the last 40 odd minutes. We are talking about the high NPA rates prior to COVID, and then we are talking about ECLGS, the wonderful scheme that the government announced, and then we are talking about post-COVID. Now, through it all, I'm trying in my mind to link it to uh, a very basic dynamic a set of dynamics that operate in this whole MSME sector versus lenders on one side, and then obviously they're large corporates who buy from MSMEs on the other. I think first things first, there has to be, we all as an ecosystem have to work on building trust in this segment. I know that as I interact with bankers or in my previous role as a banker 2 decades, I think trust is one factor that's probably there's a lot of headroom for the industry to work on. To give a simple example, you look at the retail segment. Today, when an individual wants to apply for a personal loan, or you look at the revolution that you've created in the payments sector, the real difference is that the individuals, or in the MSME's case, we talk about entities, they are reliably represented in the marketplace, therefore creating trust. Today, when you look at MSME lending, typically banks have to spend a lot of time and effort creating the right set of information for them to take a decision. End of the day, we all know are nothing but a result of how you, first of all, gather and process the right set of available information based on which you take a decision. And in this case, a decision is nothing but a simple estimate of your probability of default, right? And if you look at the MSME industry over the last few years, I think one area that we really have a lot of headroom as an industry to develop the ecosystem is to really bolster the digital infrastructure. I look at data like GST data. right? Today in the active lending models or the underwriting models, or even on monitoring of loans, GST data isn't available readily or easily enough. And the reason I'm pausing for a minute on the GST data, Mr. Mohapatra spoke about delays on payments to MSMEs. Mr. Sabharwal also alluded to that. So I think the uh, one thing that we're all missing today, and I remember this, I used to be a risk manager most of my life. I remember I used to go meet defaulters, and more often than not, the real reason used to be the reason given for the default used to be delays in payment from the principals. And very clearly, in large corporates, I don't know how many people in the management layer actually have a KRA on timely payment to their smaller vendors or the SMEs from whom they source, right? So I'll come back to my earlier point on GST and creating trust. If we all have access to GST data, right? We can look at invoices on both sides. We can understand the production cycles on one hand. We can understand who are the suppliers. We can understand the timelines for an entity to pay off their creditors versus the time it takes for them to get their money from the debtors, married with cash flows as we see in bank statements. The lenders have access to bank statements. So married with cash flows in the bank statements, and if you superimpose the production cycle with the cash flow cycle, there you have a cash conversion cycle. Now, unfortunately, all of this kind of data, we are not really able to realize the value. We are not able to create value out of this data. And that's for the 10 odd million GST registered entities. Then let's talk about the bureau, the entities that are present in the commercial. We have about 20 million entities. And then if you look at what we have done with that data in the last couple of years, we've released our CIBIL MSME rank, which is a rank of 1 to 10, with 1 having the lowest probability of default and 10 having the highest probability of default. And over time, it's proved itself to be a fantastic risk differentiator. I mean, perspective, what you want to do is really about, you want to quantify the probability of default, and you want to be able to separate risk as per the risk appetite that a lender has defined for themselves. So the CIBIL MSME rank clearly provides that separation. In fact, the point that I've made in many forums by now, and I'm always thinking about, if you look at the probability, the actual defaults, observed defaults in the CIBIL MSME ranks 1, 2, 3, and 4, and 5, the default is very, very negligible. It's almost comparable to the default you normally talk about in the retail lending world. But then when you look at 8, 9, 10, the default just completely takes exponentially. It's almost like the COVID graphs. Initial days, you have lesser number, bad example, sorry about that. And then it just exponentially takes off, right? So the bad rates are very high at 8, 9, and 10, which makes me think that when we have the commercial bureau data, we are able to separate risk. It's almost a no-brainer. If I were to sit and approve a file for lending, if the rank is 8, 9, or 10, I know very well there's a very high probability going up to 20, 30, 40% probability of default, right? Versus if I approve 1, 2, 3, 4, 5, 6, it's in decimals, the actual probability of default, right? So I'm taking this example to illustrate my point that where a commercial bureau has rich data like we have in TU CIBIL, you can enable good risk differentiation for the lenders. Then on the other hand, we spoke about GST data, which we are yet to really create value out of. Then let's talk about the smaller vendors. And I know for lenders, the problem always is that there isn't any reliable and easily available data to rely on for your decisions, right? So if you talk about small traders, the smaller merchants, we have to rely on documents that are probably very old, right? Maybe 12 to 18 months old. And then we rely on bank statements where we already know that not all transactions are routed through the bank. And then you're kind of flying blind in that segment. And no wonder many a times it leads to a higher NPS. Now, neither the customer has the right way to represent himself to the lender, nor the lender has the right set of information to look at to make the right decision. And there I talk about payments data. Today, almost every vendor, every merchant, every small trader, everybody is accepting different modes of payment. कोई wallet ले रहा है, कोई most of them accept cards now. So there's a lot of payments data, which I would say is a good reflection of the actual data about the trade that the small business is carrying out. Now, unfortunately, that data is also not easily available for all of us to harness and create value out of. So I'm going to take a very simple example here to illustrate my point. This is one of those coffee table kind of chats you have in the industry forums where people say that, if 500 small shopkeepers went to any lender and said, give me a loan to buy a refrigerator because I want to increase the stock of Pepsi bottles that I want to keep, most of the lenders would be would find it difficult to actually create the right underwriting model to assess that segment because they don't have enough information. But let's say Pepsi walks into the whole deal and Pepsi says, look, I will give you a list of 500 small merchants or shops who are good sellers of Pepsi, and this is the number of Pepsi bottles they sell, etc., etc. And if they play a role in some form because of the information they're giving, suddenly you have a much more bankable deal. And what really happened here in this example is that there is tremendous information asymmetry. And that's really the theme. I think what I'm trying to add to the points made by Mr. Mohapatra and Mr. Sabharwal really is that this industry is an ocean. We need to work on solving for this information asymmetry on one hand. And then on the other hand, I think at TU Sibyl, we have clearly seen this, and we also proven it with the Sibyl MSME rank that when you have the right set of information, it is also easy to separate the structurally strong entities versus the weak entities. To Mr. Mopatra's point about rating models, etc., I couldn't agree more with him. Particularly times like this, as a risk manager for 2 decades, I used to spend time on conceptualizing and design the right stress tests for my large portfolios. But now we know that this COVID pandemic is probably the mother of all stress tests. So to that extent, I do agree that all rating models, all underwriting models will have to be revisited, keeping in mind these some of the realities which emerge out of a pandemic like this, like the capital erosion that he spoke about. But having said that, I'm going back to my point about availability of information, where with the Sibyl MSME rank, we've tested this model during many times of crisis in the past few years. We picked specific periods and we saw how these commercial entities in our bureau performed before the crisis and after the crisis. And one clear learning that comes out through various crisis periods is that structurally strong MSMEs who know how to manage their finances well, who don't over leverage themselves, repeatedly do well in a crisis after crisis. So we are hoping that there are clear lessons there to be learned. And if we ensure through the right incentivizing on this whole payment cycle with the usage of GST data, as I mentioned earlier, and then create the right set of information and kill the data information asymmetry, and therefore create the right lending models which give confidence to the lenders to be able to assess their risks on one hand, and then in turn we also create portal like just today we launched MSME Saksham, which is a portal that we launched along with SIDBI, which is a one-stop shop for all the information that MSMEs will require. Let's say all the different government schemes, state government schemes, and the national schemes. And then there's a knowledge hub there which MSMEs can click and learn a lot more. Apart from their credit histories, which they can harness better to get better terms of the loans and they can empower themselves to harness better to get themselves better terms to for their credit facilities. So I think we have to come at it in many ways, and I think as an industry we have to come together. I think forums like this, where we have an NBFC, we have a large public sector bank, we come in as an enabling industry. I think it's good for us to put our voice together and grow this whole ecosystem. With that, I think I'll hand over back to you, Mr. Ratnu. Thank you.
Thank you, Rajesh. In fact, points that you made. But you mentioned that there are about 60 million MSMEs, and only about 1 million or 10 million, I think you mentioned, have GST, and 20 million you have data on them. So if you look at that, and they only employ about 60 million MSMEs employ about 120 million people. So many of them are individual MSMEs or very, very small MSMEs. This credit link guarantee scheme also doesn't cover the individual MSMEs, other than I think in micro MSMEs. Now the question, first, I would request all those who have joined in to send the questions. But since the questions have just started flowing in, I will ask the first question myself, and I will, address it to Mohapatra. See. in this, the credit link scheme that is there, the risk weight is nil and it is guaranteed by the government. And since the risk weight is nil, do we have, are we as bankers looking at what is the actual requirement? You mentioned about in your, when you were mentioning about your warehouse receipt financing and how they have repaid. But are you really looking at what is their actual need and requirement, or 20% of outstanding is given as a matter of course? Do we look at some kind of an underwriting model? You have to unmute yourself. Yes. Pallav, you have to unmute
Still on
yourself.
mute.
But if anyone else mic is, am
Yeah,
I
fine.
audible?
Yeah, you're audible.
So what I'm saying is, as per the scheme, there is no assessment as the standard assessment for the working capital or the term loan, which we do in normal cases. The situation is that they have put the three conditions. One is that it should not be SMA 2 and below. That means this unit is running and the unit is generating something on account of which they are basically able to pay the bank at least up to less than 60 days of their dues. So as such, there is some life left in the unit. Second is, they are not talking about the very large units. They are talking about the limits with 25 crore of the limit from the entire banking sector. They are not talking about a very high, large turnover. They are only talking about the turnover of 100 crore and less. From that point of view, I strongly believe there is no need of any special assessment to be done. Now, the risk weight is zero. That is good for the bank. The only thing I want to add here is, which is beyond your point, Atanu Saab, there is a lot of discussion in the market that the banks are sitting on huge liquidity, but they are risk averse. So my answer to them is, I'm not saying I'm not defending everyone that, and I'm not saying that we are not.
Can you hear me?
Pardon? Pardon? Yes, sir. Hello.
Yes, sir. Please.
Hello, am I
please.
audible?
Yes, you are audible, sir. Please continue, sir.
So what I'm trying to say is, it is not only the liquidity through which the credit growth can take place, because the capital adequacy as per the Basel norms and as per the regulatory norms, if the capital is not adequate, even if any bank is sitting on huge liquidity, he may not be able to pass on the entire liquidity to the borrowers. This is my simple statement. A very simple example. I am having 100 rupees liquidity. I want to basically give a loan. So for giving a loan, to have the capital adequacy up to September of 10.875%, I should have that capital. If I don't have that capital, I will be breaching on the regulatory norms. And if I breach on the regulatory norm, then another type of penalty I have to pay. So it is not only the liquidity, it is mainly the capital which is required by the banks as of today. So liquidity is not capital. This I want to make clear to, and that's the reason, sir, we look at risk weight. That's the reason I requested the rating agency, because the risk weight is linked to the rating of the company. Based on the rating of the company, the risk weight is put. Based on the risk weight, the capital deployment is put. So everything is so closely connected. Sometimes we feel that our hands are tight, and whether there is enough elbow room to move. But the need of the hour today is liquidity is required by the business. As simple as that.
Thank you.
Was I able to answer to your query, sir?
Absolutely, absolutely. In fact, there's a question which has come from one Mr. Chittaranjan Chatterjee, and this question is addressed to Mr. Rajesh Kumar. He's saying that it is high time that credit rating agencies account and allot marks for adoption of cost management practices. Mr. Balwinder Singh will be happy to hear that. Cost management practices by MSMEs to justify the government's call for having cost efficient models like ABCM, etc. Rajesh ji.
Anji, I couldn't agree more. I think this exactly goes back to what I was talking about earlier with GST Day. Today it is possible. I mean, if we were talking, let's say, 5 years ago, and if somebody had asked me the same question, I'd have said, sounds good, but how is it possible? I'll have to go and collect data every month on how each entity conducts business. And that's going to be impossible when you talk about 20 million in the bureau. And as we want to expand the footprint, nobody can go and collect the data from millions of MSMEs, right? When you talk about cost management, a cost effective running of the, or running the business efficiently, right? We're talking about the so today, going back to my earlier point as well, today it is possible to do this. If you have the GST data, it's easy to draw the cost structures, right? Because you have the invoices on the supply side, you have the invoices on the buyer side. It's easy to draw that, and we can draw cohorts. If I'm a businessman, let's say in a particular sector or a particular industry, in a cluster in a geography, then we can draw cohorts, and we can easily see how my ratios fit in on my production cycle or on my cash flow cycle versus the rest in the same cluster. And it's easy to link that to other event data that a bureau like TU Civil already has, and say people with these kind of parameters, you could say, take an example of, say, ticket size in purchases, right, versus the time you take to pay, number of suppliers. Over time, have the suppliers grown or increased the amount of supply, which tells you that the client is doing well in his production cycle, in his ability to produce and sell it well, etc., etc. The entire cycle, that data is available today. So I think it's up to us to grow that ecosystem, availability of that data, and surely rating models can be very robust, factoring in all of these efficiency parameters as well.
There's a question which has come, and this is addressed to Mr. Sabharwal. This is regarding building risk and trust. And you had also mentioned that 20% may not be enough. They're talking about the emergency credit link guarantee scheme. So how do you build trust and give them more? And what could be the issues and what could be the model?
Building trust is something which is extremely important, no doubt about it. And I think so every banker looks for it because the moment any proposal goes to any committee, I think the first thing they look at is the past behavior of the customer and whether he kept up to whatever promises that individual had made or that entity had made. Is trust important? Trust is extremely important, and it never gets built overnight. It gets built over a period of time by the past behavior of the entity. As far as looking at what the actual requirements are, Mr. Mohapatra mentioned, I think the analysis which is done for the 20% is minimal or no. Very little assessment done to give that 20% because it's supposed to quickly, disperse quickly. I think if the amount is more than that, and you need to assess what the requirement is, then assessment becomes more like a regular. And today, the assessment is both sides. It's taking lesser time because the workload in the system is lesser, but it is times you can't physically go and see. So there are certain limitations which are there. So if the amount which is required is more than what is covered under the government guarantee program, then it leads to a full assessment based on financials of the entity also, besides looking at what their payment cycles are, both for how payments they are making and how quickly are they receiving their payments and what's happening to their working capital cycle. So that is what is happening. I think one of the things which all of us are looking at, whether we are funding the entities or the employees of those entities, because individuals also seek loans, is to know, whether that happening as usual with that MSME or not. Are they receiving orders or not? Are there workers there or not? And is the production happening or not? So some of those things are looked at before we go ahead and fund. And they have become critical because a lot of companies actually faced a situation where they were shut down for a certain period of time. Situation, you assume everything is up before your money goes in.
Right, absolutely. In fact, the next question has come directly to the banker, Mr. from Megha Rathi. She is asking, what about the subordinate debt scheme for the stressed MSMEs? Are the banks looking at that, disbursing them, or are they skeptical to do so?
No, I'm not skeptical. Now, if she's talking about the subordinate scheme, which is nothing but we have to, as per the scheme, 15% of the capital of the promoters to be basically financed by the bank. And on this 15%, the promoter will give 10% as the security, and 90% will be the CGT MSE guarantee on that. The loan will be given to the promoter. The promoter has to ensure that the money is put into the enterprise. And I think the repayment period, if I recollect correctly, it is 10 years. 7 years is the moratorium, and he has to repay in 3 years. And 75%, if there is a default, then 75% of the CGT MSE cover is paid immediately on lodging the claim, and 25% is held till the decree is finalized. So, as such, those units where the promoters' equity is, they are not able to bring the equity, and there the banks come forward in helping them in providing the equity, I am bullish on that. But at the same time, madam, I want to also alert you that there are a number of units where these things are not actually happening on the ground. The money is being taken and being used somewhere else. So when we come to know about these, definitely we will be more harsh in not taking those decisions. But where we find that the unit needs capital infusion and the promoter is not having that capital, then we will definitely infuse. We do not have any sort of hesitation in that. But we should also analyze it properly that this particular infusion is required by the promoter. Why we always talk about the capital or the margin, because our respected friend Mr. Rajesh Kumar is also there. It is because that the promoter should continue to have the skin in the game. If the promoters lose the skin in the game, their skin in the game becomes zero, the risk of the default goes up. I'm not saying that in all the cases there will be a default, but the risk of default, what the rating agencies in their parlance talks about probability of default, we talk about the risk of default goes up. So there is no hesitation, there is no reservation, but in these cases, we have to do a proper analysis that this is actually required by them, because this is the capital funding. This is not the funding of the activity, this is the funding of the capital, which is not being able to be brought in by the promoter. Sir, Atanu Sahab, if you permit, one point I want to clarify on Kumar Sahab when he talked about the supply chain, and that is a very good phenomena, sir. And we have tried as a banker that industry majors, like he gave the example of Pepsi, that if suppose in a restaurant they want refrigerators for filling up with the Pepsi bottles, how many bankers will be agreeable for financing the refrigerator. But if the industry major comes in and he identifies those 50 customers, then the level of confidence goes up. You are 100% right, sir. But there also, sir, there has been misuse. I will quote you example. I will not name the company. Now, in case of the dealer financing, which moves on a electronic platform, the good auto OEMs, those who are able to sell their vehicles on a regular basis, there is acceptance of their vehicles in the market. They do not adopt this practice, but those who are not, what they do in the last month of the financial year, they simply dump the inventory on those dealers. And when they dump the inventory on those dealers, this impacts their interest income, interest expense, and ultimately the risk of the default goes up. So there is both one side of this tie-ups and also the flip side of tie-ups. This only I wanted to clarify, because we have touched base across the wide spectrum of these type of financing.
I agree with you, sir. Fully agree.
Yeah, absolutely, Mr. Mohapatra. Especially in COVID times, this is happening quite a lot also. In fact, a question has again come to you from one Madam Shobha Roy. Mr. Mohapatra said banks need to be more risk averse to spur economic growth. Can you elaborate a bit more on this? Did you say risk averse?
No,
I don't remember it, but anyway.
Atanu Sahab, I could not get the question. Mr. Mohapatra is more risk averse, is the question?
Mr. Mohapatra said banks need to be more risk averse economic growth. Can he please elaborate?
The bank should not be risk averse. I didn't say they should be risk averse. I said they should not be risk averse. My theory is very simple, sir. If I take a decision in giving a loan, which Mr. Kumar Sahab is talking about all the parameters, I agree. The assessment should not be thrown out of the window, I agree. The information base should not be thrown out of the window, I agree. But within those parameters, if I take a decision to give the credit, I have the 50% probability my decision will be correct. Based on that information, I say no. There is a 0% probability my decision will be correct. So whether I should take a decision based on information to give a loan, or I should not take a decision to give a loan. So I will prefer to give a loan based on the information. It doesn't mean that I will give the loan to all Tom, Dick and Harry.
Absolutely.
So I am not risk averse. I strongly believe that even if I am exposed to all type of inquiry, even in posteriority, still then if I have taken a decision based on all the information available to me, and I have not played around with the information, I have taken a very, very judicious decision on that, my decision will be correct. So if anyone thinks this is risk aversion, then I have no answer to that.
What Mr. Mohapatra is saying that, in fact, what he mentioned, he is not risk averse. He will take a decision based on a proper risk assessment. That is what he has mentioned. There is a question which has come directly to Mr. Sabarwal. Mr. Sabarwal, they're saying in NBFCs, in your forms for MSMEs, will you insist on collaterals to give loans, or will you also give collateral-free loans?
So both types of loans are given with collateral and collateral-free. So obviously the norms are more conservative whenever they are collateral-free loans. We look at different parameters in the financial form to decide what to give, but types of loans, and unsecured.
The next, I would, Mr. Balwinder Singh, do you have any questions or any points to add from your cost accountant's perspective or chartered perspective?
From the correspondent perspective, I just did some sports from the banking industry. I'll just share that the Institute of Correspondence of India is framing a technical guide for various industries, businesses, and organizations, which will give step-by-step guidance on how business continuity plan in the post-COVID scenario will be there. And for the banks also, this technical guidance suitable on how to monitor successful implementation of proposed plan is being finalized by the institute. We have already given the request to all the bankers to nominate their senior officials in our committee to support as the finalization of technical guide. Definitely, we'll be supporting the industry in the banking thank you all the time. Thank you. Thank you.
Right. There's another question which has come to again to Mr. Sabharwal. This, I think, is a general kind of a question where they are saying that the government is guaranteeing, 75% till invocation and 25% on conclusion of proceedings. Proceedings takes an enormously long time. So are they just guaranteeing 75%? Because they have made available, I think, 400 crores or something, 40,000 odd crores, sorry, not 400, 40,000 odd crores for this purpose. If there is a default.
No, so the whole intention of the here is that it should not be treated simply as a loan given out and the moment it defaults, that you invoke the guarantee. But you should do some amount of assessment at your end and should make all efforts to collect the monies, because the wherewithal to collect the monies does not lie with the government. It lies with the entities, who have lent money. So it is more for ensuring that in right earnest efforts are made by the lenders to collect monies in case there is a default. But yes, if it was 100% guarantee upfront, monies would have flown a little faster. And if it is going to come, 25% of the monies are going to come later, I think there is going to be some assessment done by the though not a detailed assessment, but some assessment being done by the lenders. One should not forget that these loans are being given by lenders to those entities who are already their borrowers. So if they're giving 20 rupees out, they've already given 100 rupees. So there is already an exposure which exists with those entities. And so there is information available about those entities when we're giving out those 20% loans.
Okay. In fact, yes, has to be some skin in the game. But having said that, a corollary question is that are we also funding the small MSMEs or the MSMEs for their capital requirements upfront? If they're short of capital, are we giving them capital, not lend?
Yeah, government has come together with a separate scheme for funding equity. And normally equity is not something which an NBFC will provide or a bank will provide. It's largely going to come from their own sources or public markets or private equity players or the government scheme which has been brought about.
Right. There's a general question. I think, Mr. Mohapatra, you may be having this industry-wide, Mr. Zaid Khan is asking of bank loan books which are under moratorium, what estimated percentage is for MSMEs, approximately?
Was that addressed to me, sir?
This can be answered by, Mr. Mohapatra, I think, if he has the, at least the bank's overall, the figures. Any one of you can answer, whoever has the figures. But the question is, of all the bank's loan books under moratorium, what could be the estimated percentage for MSMEs?
So my quick opinion on this, I think before we question, I My opinion right now is that we are not even clear about the actual percentage of book that's actually on moratorium, right? We had Morat 1, we had Morat 2, and then we saw all the disclosures by various banks and a few of the investor calls in the last few weeks. I am a little worried if the way these numbers are calculated by different lenders, I'm a little worried if it's standard or if it's consistent. So to that extent, I think it's probably a little early to comment on, first of all, what book is under morat for most of the lenders, and then within that book, what percentage is with MSMEs. We'll have to probably wait some more time because till we have that clear and accurate data on this.
Right. The next question is also for you by Mr. Krishna Kishore. He is asking for customers in other countries, how do you do due diligence and financial worth and rating? From your
We don't have
from your TransUnion angle.
Yeah, at this stage, we don't have any inter-country kind of a related product. It's really about using what's available in that country. We are discussing creating such products given a lot of specific requirements when, for example, students migrate to, let's say, to US to study, etc. So we are thinking about creating some products, but as of now, nothing really on the anvil.
Absolutely. Mr. Singh, any questions to the panelists?
Nothing, sir. Nothing from my side.
Nothing. In fact, today also we are not getting. We have got quite a few. I think we have covered all of them.
I can add one query came about that there should be evaluation criteria, management accounting technique should be considered. One question came from one of the colleagues. The question.
Yeah, can you just frame that?
Question was that the credit rating agency should account for allotting marks to adoption of cost management practices by MSMEs.
Okay.
Presently, in the present scenario, we for the revival and go in a robust manner to revive the industry, cost has to be efficient. We need to adopt a cost efficient model. I think the query and has asked about the credit rating agency should monitor marks or allot the marks, whether the company is following a cost efficient model like ADCM or some other models.
Yeah, I think that question was covered. That question was covered. In fact, Mr. Rajesh Kumar, to get better, robust data, whatever we have mentioned about, the GST and other from financial transactions that are taking place. But having said that, what more could be done? Because the whole issue simply lies on getting good data, good governance data, so that it can generate good information, and in turn it will, I think, give a better understanding of what finance do they need or what kind of credit do they need.
Yeah.
So what else could be done? I mean, this is an area because most of you, like you rightly mentioned, the quantitative data is such, and can we look into more behavioral traits? I'm just thinking, I mean, what could be done? And this question also has come from Harsh Shukla.
Absolutely, sir. I think first of all, when you go back to what I was saying earlier, things like data sources like GST, right? The actual moment of truth. We've actually found a good lift from a lot of behavioral variables, right? Even about filing it on time, etc., etc. A lot of behavioral traits there. But again, I think that only addresses the problem from a lender's perspective. I think there is as much work to be done on the side of the borrowers as well, right? As we mentioned earlier, is there enough information for that they have available easily enough to help them take decisions? A, B, do they have enough awareness about what are their possibilities and opportunities, not just from a credit perspective, but overall at an industry perspective? And thirdly, their own interface within various associations of the industry or with, let's say, the lenders. I don't think it's reached the level of maturity that we've kind of reached as an industry on the retail side. You look at all the beautiful apps on the retail side, click, 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 transactions get done. When it comes to MSME, small businessmen, if we were to ask 100 of them today, is it a joyful experience for them? Is it a very convenient experience for them dealing with lenders? Probably there's a lot of headroom there. So we also need to develop simple interfaces, simple apps for the MSME segments to use on the other side. And that's why I'm thinking we can probably balance both sides, what we do for the lenders on one side and what we create for the MSMEs themselves on the other hand.
Another question to you from Mr. Satish Agarwal. This is regarding eastern states. They have unique challenges, and credit information companies should have special rating modules to factor in those challenges.
No, I think it's a good point to validate. We haven't done that in the past because typically the minute you start talking about a slightly different rating model, then you start worrying about biases and prejudices coming in. And when it is geography or particular cultures based, then you're worried about going on the wrong in the wrong direction. So it's a bit of a delicate issue, but we will look at this and see what we can come up with.
I think
Because at the end of the day, you also have a responsibility to ensure a very fair lending practice without any bias that comes in out of a particular society or a culture or a particular set of people. So it's a little tricky, but we'll see what we can do on that.
yeah. In fact, we are very lucky to have Mr. Pallab Mahapatra with us because he's an expert on stress assets resolution. And since they're with us, from my side, I think we'd like to hear a little from him on the insolvency and bankruptcy code and what is happening. Many of the big ones have got resolved, but it is taking an inordinately long time for the others. Can you give your views? I think it would be very nice for us to hear about your views.
Sir, when I was the Deputy Managing Director in Stress Asset Resolution Group in SBI, before taking over this MD and CEO in Central Bank of India, at that time I am talking about from 2016 to 2018 September, there were a lot of interest being shown by international investors to invest in the stress assets in India. I will give you a simple example that like in case of power projects, the stuck power assets which were normally the investment for setting up a plant is around 8 to 9 crore per megawatt, and through this resolution process it was being available at something around 4 to 5 crore per megawatt. So they were seeing they were showing a lot of interest. But what happened is in the process of this IBC process, there were a lot of changes which were brought in. Some of the investors thought that whether there will be a continuity or not, number one. Number two was they were, since in the judiciary or quasi-judiciary process in the country, there is always a scope for the appeal. And in certain cases, the appeal went so long for the resolution. And you know, one particular case, it took around 1.5 years to 2 years. And finally, the judgment came and the amount was paid in December 19. And there also the lenders also lose the interest because unlike in DRT suit, where the interest keeps on accruing till the amount is paid, or in case of NCLT, the interest accrual stops after the claim has been admitted. Now, if the claim has been admitted 2 years back, so for 2 years there is no interest income on the whatever is the investment of the bank in those assets. So this is another point. And but the amendments which were brought in by the government in very, very quick time, that gave confidence to some of the investors. But after this COVID-19 has shaken up the issue in the sense the investors across the globe, because most of the investment was coming from outside, investors across the globe as such do not have that much of money. Now, what we saw in 1920, say mid part, the ARCs were putting the money on 100% cash sale basis. So what they were doing is, international investor was basically paying them 85 rupees. They were paying 15 rupees, means they were paying 100 rupees cash. And for 85 rupees, they were issuing the SR to the international investor. Now this 85 rupees that the international investors were bringing in, to a certain extent has dried up. So the IBC process during this COVID-19 period Though now no new case can be referred to, but those cases where the default was for COVID-19, those cases were being taken to NCLT, but the resolution process is slow.
Very slow, yeah. In fact, Mr. Sabharwal, hello.
Yes, yes.
See, do you have any final thoughts? But one question is also there. You can, include it in your final thoughts from Mr. Rajesh Swami. What would be the next step, according to you, for kickstarting the economy post COVID or post extending the 3 lakh crores to specific MSMEs?
Uh, it's a topic I think so on everybody's mind and must be on top of mind of the government too. I think yeah, one thing which we have to remember that there is no certainty of the end date which we are seeing at this point of ending and things. As I said before, we have to ensure that we start all activities and all things while taking all precautions. We can't be in a state where we will just hibernate. I think we have to, everybody has to start their enterprise. Everybody has to start their office. We may not start with full attendance. We may start with 1/3 the attendance or whatever it is, but we have to start. Is to allow public transport to work, with less attendance there too. But we have to allow the economy to work. The second is, when the economy starts working, there could be challenges in what people could have thought that, business will come in this shape and size at this speed may not happen. So the industry may need actually a one-time restructuring option available, such that in case things don't go as anticipated post the deferment period ending, then one can evaluate business on its merit and then decide to give a moratorium, or to give a restructuring or not. And besides these two things, I'm also hopeful that the government will work on a package to stimulate demand, because we have to look at how demand can be stimulated. That's it may mean dipping into the reserves, which is a difficult task at this point of time. But I think there is very little option there. Like even Mr. Mohapatra was saying in the beginning, we have to act now. If we don't act now, tomorrow may be very, very difficult. So from that perspective, we have to do things to stimulate demand, and we should do those things first in those areas which are the largest employers. Like agri is one of the largest employers. Infrastructure, construction industry is a large employer. Manufacturing is a large employer. So we have to focus on these sectors and ensure that there is demand stimulation done for these, so that business and there is demand for products which get produced by MSMEs. Let me put it this way.
Right. Because basically, with the fiscal pressure the government is in, I mean, stimulating demand is a necessity, but how much they can do, obviously, we need to take a look. And the other thing that you rightly mentioned was the restructuring of specific industry companies in specific industries, and specific companies need to be looked at once within if it is a prolonged COVID, as well as when the COVID is over. Entirely.
Yes.
I think that we are coming to the end of the session. In fact, I would like to thank all the panelists, Mr. Pallav Mohapatra, Mr. Rajiv Sabharwal, Mr. Rajesh Kumar, and Mr. Balwinder Singh, who have joined us. And most importantly, all those who have joined in the webinar, I hope it has been helpful. We have got a number of questions. Maybe we have missed out one, but I don't. I have tried to, cover all the questions. I would also, on behalf of Indian Chamber of Commerce, would like to thank the team that has put up, the technology team, as well as Mr. Rajesh Ghosh and their, members in their team to make it a success. In fact, this has been the third round we have had, MDs and CEO from other banks, large banks, as well as from other financial institutions. And this has actually been something which has caught the imagination of the people who are really interested to, see the recovery, not only of the MSMEs, but of the economy in general. So with that, I would like to thank everybody for joining us today. Thank you again, Mr. Rajesh Kumar, Mr. Mohapatra, Mr. Sabarwal, and Mr. Balwinder Singh, who is Mr. Singh is a part of us, and he has been with us giving the welcome addresses in all these meetings. Thank you.
Thank you. Thank you.
Thank you very much.
Thank you all very much.
Connect. Thank you.
Thank you.
Thank you.